All right, let's dive in. We're looking at Jyoti CNC Automation today.
A company that's really at the heart of India's manufacturing boom.
Yeah, they're making big moves. We've got the transcript of their third quarter FY25 earnings call.
From February 11th, 2025, pretty recent.
So we're going to break it down.
Really try to understand Jyoti's business.
Where the industry's headed, opportunities, risks, all that.
Yeah, it's fascinating.
I love how the call starts by breaking down their revenue by segments.
And it's actually surprisingly diverse.
Yeah, you don't always see that, especially with a company like this.
Right. Diversification is key for any company, really.
For sure.
But for Jyoti, it seems like, I don't know, particularly smart.
Like it's protecting them or something?
Yeah, shields them from fluctuations in any single market.
Makes a lot of sense.
And their Q3 revenue split shows that balance,
Okay, break it down for us.
Aerospace is leading at 49%.
Wow, almost half.
Then auto and auto components at 16%.
Okay, so a pretty big drop off, but still significant.
Then general engineering is at 21%.
So bigger than auto.
Yep.
And then what?
Electronic manufacturing services, or EMS, at 10%.
Gotcha.
And then all other segments make up the remaining 4%.
Okay, that aerospace being the top dog is interesting.
Yeah, I think it's strategic, actually.
Oh, tell me more.
Well, remember their subsidiary, Huron-Grafenstaden.
Right, they acquired them a while back.
Exactly, and that gave them a direct line into the European aerospace market.
Huge, massive.
So they're not just, like, making small parts.
No, they're manufacturing critical structural parts.
Wow.
Even engine components for companies like Hall, Tata, Airbus.
And Azad Engineering, right?
Yep, that's right.
High stakes.
High reward, too, probably.
Wow.
Shows they're not just playing it safe,
Yeah, going after the big legs.
Those high value, high barrier to entry segments.
Okay, so next you've got auto and auto components, making a decent contribution.
Right, and I think that's where India's domestic market strength comes in.
How so?
Well, the auto sector in India is just booming.
That's true. And the shift towards electric vehicles?
EVs, yeah, they're everywhere.
It's creating a whole new playing field, basically.
Interesting.
And Jyoti is taking advantage of that.
What are they doing?
They're developing specialized machines for manufacturing EV components.
Smart move.
Super smart, especially considering how much that sector is going to grow.
Okay, and then there's general engineering holding steady at 21%.
Yeah, that's kind of the bedrock of their business, I think.
The bedrock. What do you mean by that?
Well, it's a really broad category, covers lots of industries.
Okay.
And this segment provides stability, consistent revenue flow.
Ah, so it keeps them going when other things are up and down.
Exactly, which is vital for any company, especially one aiming for aggressive growth.
Like Jyoti.
Like Jyoti, exactly.
And then finally, EMS at 10%, bringing up the rear. EMS. What's so special about EMS?
I think this is the dark horse in the race, honestly.
The dark horse, okay.
India's EMS industry is about to explode.
Really?
Projected demand for over 100,000 CNC machines.
What, in the next few years?
In the next 5 years alone.
Wow, that's a lot of machines.
It is, and Jyoti's already planning for it.
Planning for it how?
Capacity expansions, getting ready to meet those future orders.
Not waiting around.
Definitely not.
They're on top of it.
Big time.
Okay, so zooming out a little bit.
Yeah, big picture.
Juneja made a pretty bold prediction about the industry.
Oh, yeah? What's that?
Said that India is on track to become one of the top 3 consumers of machine tools globally by 2030.
That's a huge jump.
I know, right?
Highlights the potential of India's manufacturing sector, though.
Yeah, true. It's massive.
They're currently ranked 6th.
With a machine tool consumption of $3.9 billion.
Which is a lot, but
to get to the top 3.
They'll need to leapfrog some major manufacturing powerhouses.
Yeah, that's a steep climb.
It is.
So what's driving that projection?
Is it just wishful thinking?
Right, or are there actual factors at play?
Definitely not just hype.
Okay, good.
There's a bunch of things driving this growth.
Like?
Well, the Make in India initiative is a big one.
Right, pushing for domestic manufacturing.
Exactly. Plus rising labor costs in China.
Making India more attractive.
To global companies, yep.
And, of course, India's own huge and growing domestic market.
All that means rapidly increasing demand for machine tools.
Putting companies like Jyoti in a prime position.
Couldn't be better for them.
It's not just about meeting current demand, it's about what's coming.
The future, yeah, anticipating and preparing for exponential growth.
Exactly, and Juneja laid out Jyoti's strategy for all that.
Oh yeah? What is it?
Outlined 4 key, he called them growth engines for the company.
I like that.
Yeah, pretty good.
So what are these engines?
Well, the first 2.
Automobile and general engineering and aerospace.
You got it.
Those are already firing on all cylinders.
Yeah, he described them as fully fired.
Meaning strong and sustained demand.
Makes sense.
They're already well positioned.
With their established presence and their ongoing innovation.
And of course the capacity expansions.
They're all over.
Capitalizing on that momentum.
So those are the workhorses driving steady growth.
Yep. Reliable.
What about the other 2 engines?
The third one is EMS.
Right, electronic manufacturing services.
That one's about to take off.
Really?
Big time.
Why is that?
Remember the projected demand we talked about?
100,000 CNC machines in 5 years, yeah.
Exactly. And Jyoti's capacity expansion plans are directly aimed at that.
Getting ready to ride the waves.
Exactly. As it crests.
That's smart.
Bold, but smart.
Shows they're thinking long term.
Definitely.
And then the fourth engine.
One that's just getting started.
The semiconductor industry.
Semiconductors. That's a hot topic everywhere.
Yeah, for good reason.
India wants to become a major player in semiconductor manufacturing.
Ambitious.
And Jyoti's getting ahead of the curve.
How so?
They're developing a specialized product basket for this sector.
Specifically for semiconductor.
Yep. Interesting.
It's a strategic bet, could pay off big time.
If India's semiconductor dreams come true.
Sounds like Jyoti has a pretty clear roadmap for the future.
They do.
But even with all these growth engines firing,
Yeah.
they're not without challenges.
Of course not. No businesses.
Their current order book, it's impressive.
It is. Very impressive.
But it hints at some potential roadblocks.
Oh. Tell me more.
Well, as of December 31st, 2024, their order book stands at
Wait, how much?
a whopping 4,360 crore rupees.
Wow, that's a lot.
That's about 2.5 years of work.
At their current production rate.
Yeah.
So that sounds great on the surface. There's always a but.
What is it this time?
Jadeja mentioned customer are expecting faster deliveries.
Makes sense. In today's world?
2.5 years is a long time to wait.
Yeah, nobody wants to wait that long.
So it's a double-edged sword.
How so?
Huge backlog of orders is great for revenue visibility.
Definitely.
But if they can't deliver quickly enough.
They could lose clients.
To competitors, yeah.
That makes sense.
And the main bottleneck they're facing is capacity.
Their existing facilities can't handle it all.
Exactly.
So those capacity expansion plans are crucial.
Absolutely crucial.
But even with the new facilities.
There's the question of ramping up production smoothly.
And efficiently.
Right.
And that's where people development comes in.
Huge factor.
Can't just have fancy machines.
Need skilled workers to run them.
Exactly. Jadeja highlighted this as a key challenge.
I remember that.
And a core element of their strategy.
Makes sense.
This industry thrives on precision.
Absolutely.
Highly trained workforce is a must.
Not just technical skills either.
Right, it's more than that.
Leadership development, problem solving, a culture of quality.
Building a team that can keep up with the pace.
And actually drive it.
So what are they doing to address this?
They're setting up a center of excellence at their Rajkot facility.
What's that all about?
Seems like a multi-pronged approach focused on learning. Employees can develop new skills, experiment, contribute to innovation.
So fostering a growth mindset.
Yeah, exactly, which is so important in a dynamic industry like this.
They want to be a magnet for talent.
Makes sense in a tight labor market.
Attracting and retaining skilled workers.
A major competitive advantage.
But it's not just about competing within India.
Right, they're playing on a global stage.
And that brings its own challenges.
Yeah, it does.
Like those global players entering the Indian market.
Like Fanuc, yeah.
That's some serious competition.
Fanuc is a giant.
So how does Jyoti plan to compete?
Well, they have a few things going for them.
Like what?
First, they're in India.
Where labor costs are lower.
Than many other parts of the world, yep.
That's a big plus.
Built-in cost advantage.
Can they compete on technology, though?
That's where their R&D investments come in.
Right, they're constantly innovating.
Pushing the boundary.
What have they come up with lately?
They launched 7 new machine models. Just in January.
7, wow.
Including a 5-axis gantry machining center.
What's so special about that?
It's a game changer.
How so?
Precision and complexity.
Okay.
It can move in 5 different directions simultaneously.
Like a robotic arm or something?
Kind of, yeah. It allows for incredibly intricate and accurate cuts.
Wow.
Opens up all sorts of possibilities.
For manufacturing complex parts.
Especially in demanding industries like aerospace.
So they're not just keeping up.
They're pushing the envelope themselves.
That's impressive.
They also launched specialized machines for EV components.
Really?
Yep. And a high-performance horizontal machining center.
So they're covering all their bases.
From EVs to heavy-duty industrial applications.
Like they're building an arsenal.
Of machining marvels.
But even with all this innovation.
The playing field is still crowded.
So how do they plan to navigate that?
It's a multi-pronged approach.
Lay it on me.
First, leveraging their existing strengths.
Okay, like what?
They have a large installed base of machines in India.
That's true.
Brand recognition, customer loyalty.
Right, they've been around.
And Huron gave them a global footprint, access to new markets.
So they're building on their foundation.
While expanding their reach.
Smart.
And of course, the R&D keeps them ahead of the technology curve.
It's a solid strategy.
It is.
But are there other risks besides competition?
Oh yeah, there's always risks.
Like what?
Well, the global economic outlook is always a wild card.
You never know what's going to happen.
Exactly. Any known turns could impact demand.
For their machines.
No matter how innovative they are.
Makes sense.
And then geopolitical risks, supply chain disruptions.
Cyber attacks.
Yep. Always a possibility.
It's a complex world out there.
Businesses need to be prepared for anything.
So diversification, strategic planning, risk management.
Oh, crucial.
Jyoti seems to be approaching this with a good mix of Optimism and pragmatism,
I think so too.
pushing for growth but acknowledging the potential pitfalls.
It's a delicate balancing act.
It is. Yeah, it really is a balancing act.
So let's talk about their financial performance.
Let's get into the numbers.
Their Q3 FY25 results were pretty impressive.
Yeah, they were. They reported revenue of 449.5 crore rupees.
A 19% jump compared to the same quarter last year.
That's a pretty healthy growth rate.
Especially for machine tools. It's capital intensive,
Right.
Shows their strategy is working.
All that diversification, innovation, capacity expansion.
It's all paying off.
What about their profitability? Are they sacrificing margins for growth?
Not at all. Actually, their consolidated EBITDA was 112.6 crore rupees.
Okay, and that's a 17% increase year on year?
Yep, and they maintained a steady EBITDA margin of 25%.
So they're growing profitably.
Exactly, that's the sweet spot.
Top line growth and healthy margins.
What more could you ask for?
So what drove this strong performance?
Well, a combination of factors, as we've been discussing.
Right, all those things we talked about.
Robust demand across all segments.
That's a big one.
Plus the capacity expansion, fulfilling orders faster.
More efficiently.
And of course, their focus on people development.
You can't forget about the people.
Highly skilled workforce is key for quality and productivity.
Especially as they scale up production.
Exactly. Gotta have the right people.
Okay, so beyond revenue and EBITDA, what about overall profitability?
Did it trickle down to the bottom line?
Is the question.
The answer is yes.
Give me the numbers.
Their consolidated profit before tax soared by 39%.
Wow, to how much?
93.1 crore rupees.
And after tax.
That jumped a whopping 67% to 80.2 crore rupees.
Those are impressive figures.
They're firing on all cylinders.
Operationally and financially.
And their 9-month performance is even more impressive.
Really? What did they do in 9 months?
Consolidated revenue hit 1,242 crore rupees.
That's a 40% increase compared to last year.
And EBITDA grew 88% to 313 crore rupees.
Wow, they're on a roll.
With an improved EBITDA margin of 25.2%.
It's clear they're capitalized on all those industry tailwinds.
And executing their strategy well.
But even with all this success,
there are always challenges ahead.
Right. Can't get complacent.
Those capacity constraints we talked about.
Still a big one.
They're working on it with the expansion plans.
But any delays could hurt.
Impact their ability to meet demand.
And the competitive landscape is getting tougher.
Fanuc coming in, that's a game changer.
Putting pressure on pricing and margins.
Definitely.
So Jyoti's got their work cut out for them.
But they seem ready for the challenge.
From what we've seen.
Confidence, strategic planning, commitment to innovation.
They're not backing down.
Not at all.
So this has been a fascinating deep dive into Jyoti CNC Automation.
They're at the heart of India's manufacturing boom.
Not just reacting to the market.
They're shaping it.
With their bold moves and strategies.
They're definitely a company to watch.
And it leaves us with some interesting questions to ponder.
Like what?
Will their capacity expansion be enough?
To keep up with demand.
Can they maintain their edge as competition intensifies?
And how will their focus on people development play out on a global scale?
These are the million-dollar questions.
Only time will tell.
One thing's for sure.
Jyoti CNC is not afraid to take risks.
They're pushing boundaries, charting their own course.
A force to be reckoned with.
In the world of Indian manufacturing.
That's for sure.
Thanks for joining us on this deep dive. Until next time, keep learning, keep exploring, and keep diving deep.